The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome back, folks. So we have the Dow Industrials right now down 327, Nasdaq's off 73, S&Ps are down 23, gold's up 720 at 1344. We have silver down 9 cents, $16.30. There's some real divergence inside that metal market this morning. Gold's
Welcome back. You still doing the show from last night? One big full circle? You're on fire.
no doubt, man, no doubt. Notes and bonds, you get the 10-year note up 3 ticks, 120.30, 30-year bond up to 6 ticks, 146.02. King dollar down $1.89, 89.670. Still hanging at the top of the range, but bottom line, no juice there. Euro is at 123 to 1 US dollar. Yen is at 106.34 to 1 US dollar.
Well said. I know, right?
Hey.
Quite a market. And quite a bit. We're getting off of the lows already. I mean, market's down substantially. But, man, talk about, whether it was 6 in the morning at the lows of the futures. We're dramatically off those lows now.
Well, the NQs were the ultimate yesterday, folks, okay? The NQs went from 64, 62, went down 100 points, up 100 points, down 100 points, then up 120 points.
Every hourly update I almost had to snicker as I went through the amazing swings, one way or the other. And guess what? Today's the same deal so far.
Guess what? You can be a bull, you can be a bear. If you're in this market intraday, guess what? You want defined risk.
That's right, babe.
And for defined risk, let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. Every trading day right here, folks. You want to understand option strategies, bull strategies, bear strategies, strategies in general, future markets. Great show. Kevin and his team, 11 to 12 Eastern Standard Time, right here at TFNN. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
Morning, Kevin.
Another bumpy ride today, but I think Tommy's right. They are significantly off their lows here.
Oh, no doubt, man. The NQs yesterday, Kevin. That was like, I mean, I've seen some nice trading markets, but that was like amazing.
Today might be the same thing.
Oh,
it's
no,
shaping up
it
like that.
looks it. I
But
mean,
I agree. No, it's 100 points down, 120
Right.
points up on an
Right.
index that's trading at like 6,800. So, man, oh, man.
Pretty intense. There's no doubt. And,
They're big moves, guys, that's for sure. And, a lot of the news out this morning, this is a pretty interesting news cycle we have going on, because remember something, for your listeners, nothing is in stone yet. These are all negotiations. These are all things that aren't coming in really till the end of May is the first time you'd see any of these implemented. So I think you really got to be careful here about a knee-jerk reaction to some of this rhetoric.
Yeah, no, I can see that. I mean, I guess news cycles in general, my take, Kevin, is that it's just a correction, it's a sell-off. There's always something in between it. Do you know what I'm saying? Like, what is the reason, okay? There's always something there. People saying it's negotiation. Well, guess what? If it's a negotiation, the market just took away $1.5 trillion. So,
exactly right. And uncertainty, right? And uncertainty is going to lead people to do that.
Right. It's pretty. Hey, it is what it is.
Right.
Inside the option market, we were talking about this a little yesterday, and like the VIX, it seems that the VIX should be higher. I mean, it's up 2 points today, but you know what I'm saying? It's like the volatility is so high. It's like, okay, but I guess what has happened is that every time that the market keeps coming back, that keeps the VIX lower too, right? I mean, that's the reality, right? Because you get enough people basically selling insurance versus buying insurance.
Sure, and VIX at a 23, Tom, that's basically saying that 1/3 of the days, you should get something just at or below a 1.5% move.
Okay.
A third of the day. So as long as you're getting that,
and that's what we are getting. Yeah.
I don't know. It depends how long you go back.
Well, this morning was 2%. Yeah, right.
Right.
And yesterday it was, big numbers, and Friday it's close. No, and it has to be the average, which is, but this past.
You have an argument. that hey, are we at the right level? Are we getting the moves, or are we actually getting more of
Right.
moves than the VIX
Yeah.
is showing? And that's a look that, if people think, remember, VIX only moves if people are buying volatility in the SPX.
Right.
So maybe we're getting to a level where the buying of volatility, the buying of protection is waning here a little bit. That could absolutely be the case. Or, on a down day, you get some sellers coming in. And then maybe that's why VIX isn't as high as it should be, because people are taking advantage of this to actually sell some volatility. That'll keep markets, the bids lower and
Yes.
the overall VIX level lower.
Yeah, and I can see that.
Yeah.
And then, of course, inside the commodity market,
But that's where the bigger moves are today.
oh my God! I mean, you saw. I mean, I know you like the soybean meal.
Yes.
The beans themselves. Well,
Beans down 2%.
Yeah, that's.
That, you know what, Tom? Now the beans have some issues, right?
Yes.
And the issues really in the beans are higher prices for farmers.
Right.
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 Think about this. You got higher feed costs, right?
Yeah.
You got corn and soybean meal both up big this year, right?
Yes.
You've got higher energy costs. Diesel, gasoline, both higher. You got labor market. Wages are 3% higher. You got higher interest rates. The loans on the farm loans are higher, right? You've got upward pressure on metal prices because of the tariffs. But that said, this whole idea that China's not going to buy our grain, so therefore what? The grains are going to go unsold? That's not the way it works.
Right.
Did you know?
Right.
If China goes and buys all their grain from Brazil, okay, and shuts out the U.S., well, the rest of the world still has to buy grain too, and it's just going to be replaced. There's only a finite amount of soybeans and soybean oil and meal in the world, and we've got some, and it goes in 6-month rotations between South America and here. So beans can be weak because of overall prices, and this may have a small effect, but I don't think it's this big of a move. Frankly.
I love how he just broke that down. What's so cool about commodities, Kevin, is that like how you broke that down. Those are just inside a commodity. That's what makes a commodity, and we got to eat. So it's like,
Well, the market's saying they're going to get sold. They're just going to get sold at a cheaper price if
Yeah.
China's not bidding on it.
That's exactly. Right. There's no doubt, man. And
But this is some serious percentage moves, Tommy. So,
Oh, yeah.
like I said, hey, if there's a fundamental issue with grain supplies and things like that, okay, we can make that argument. But the fact that someone thinks that like we have 150% of the grain we need, and if China doesn't buy it, it'll go unused, that I don't buy that.
And it's just, I was just going to point out, I mean, it's quite a bounce for soybeans off even the low. So
Today.
volatility, right? You know, so they're struggling to find where that price is right now, for sure.
Exactly.
you got to love it. Folks, right here, 11 to 12 Eastern Standard Time, every trading day. A couple ways you can get it. Just go to TFNN.com, hit Tiger TV. You can go to YouTube, just hit search TFNN, subscribe. It's free. Every program pops right up. Bottom line, you're going to get a great program, 11 to 12, as you do each and every day.
We got 45 minutes. Maybe markets will be green by the time Kevin does it. We'll see.
Kevin, you have a great one, a safe one. We look forward to the show in 45 minutes.
Thanks for having me on, guys.
Thanks so
Kevin.
much. Stay right there, folks. Tommy and I are coming right back. We have the Dow down 311, Nasdaq's off 64, S&P's are down 21, gold's up 770, and silver is down 6 cents. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 337. Nasdaq's off 67. S&P's are off 23. And Wednesday, we got oil numbers out.
We sure do. So, oil has had some volatility this week for sure,
big
right?
time. It was down big yesterday.
Yeah, so let's jump into here. We're going to jump into our commodity spreads. Oil, so it's 10.19, let's call it right now. And let's jump in first to the 11 a.m.s. We'll jump. So oil right now trading 62.34. Let's pull up the chart as we get into this. So quite a cascade. This is about 4 in the morning, even from 63.40 down to 62.16. So about $1.25 to the downside. And I mean, even backing this up where we just were, you know, if you back it up just to Monday, we're above $65. So we're down pretty substantially, getting some volatility. So 62.33. We'll jump into the 11 a.m.s first. 62.50 is going to be a price point that we can use. We're looking at maybe setting up, volatility. So we'll have a bullish and a bearish spread. Here's our bullish spread from 62.50 up to 64, $1.50 in either direction, and here's our bearish spread going from 62.50 down to 61. So again, we're 62.35. So the bearish spread is going to be the one that has some intrinsic value, about 15 cents. Bullish spread slightly out of the money. So the bearish spread is going to be more expensive to the tune of 15 cents because that's going to be the intrinsic value you're paying. You'd be selling the bearish spread. It's going to cost you $30. 15 cents of that is intrinsic value, 15 cents a premium. And the reason why I point out the intrinsic value versus the premium, because then when you go to the bullish side, that's all premium. Guess what? Same exact premium, right? Just no intrinsic value, basically. So you're looking at about $45, which would be 45 cents away from 62.50. Becomes your break even. Okay, so those are the 11 a.m.s. Now, we haven't jumped in, and we're going to have to refresh this. I had this up, so we got to get our noons up here. That's what's going on. We'll refresh it. And all you do is you just refresh the screen. I'm just taking down my own information so it's not up there. And we'll get it back over here. Okay. So because I have been looking at the Nadex platform all morning, these spreads are loading every hour, basically, as the market is coming to, right? So again, we're going back into crude oil, and now you'll see the 10 till 12s are available. I'm just going to close out some of these screens for simplicity. Get that, close it out. Okay, so again, we're trading about 62.30 now. And so these line up with different price points because oil's been moving so much this morning, like we
Right.
talked about. So 62.30, what's interesting here is looking at the 11 a.m.s, right? We had a little value on the bearish spread. We had
Yes.
15 cents. So that might work out nicely if you were slightly bearish. You had a bearish bias.
Right.
What if you're bullish bias, but you still wanted a volatility trade? The noons actually line up, I guess you could say, I was going to say a little bit better. You could choose. You can choose either 62 being your point.
Which
And I was just saying, or 62.75.
inside the bull.
You know,
Right.
they go both ways. But yeah, so in this case, 62 being our kind of pivot point,
Yep.
going up to 63.50. Your bullish spread's going to have all your value, but this time you're talking about 30 cents of intrinsic value. This is where it
Right.
might get a little expensive.
Yeah.
But if you're really bullish bias, maybe that's something you want to do because the bearish spread's going to be cheaper because you're so far out of the money now. So here's your bullish spread, 62 to 63.50. You got 30 cents of intrinsic value. You're paying 42, so
Okay.
$12 in premium.
Yep.
And this is where things line up so nicely as you get used to this, because guess what? Then you're selling the 62 one,
Yep.
no intrinsic value, about 30 cents out of the money, and you're paying the exact same premium though, $12, right? So that's lining up at $54 for the noons. And let's just jump around to see where the 230s line up. So 230s line up at 62.50. Okay, now
Okay,
that's where
that's the same as the 11,
that's
which
where
is
our
cool.
11 a.m.s were. Now
Yeah.
what's interesting about the 8 till 230s, I'm just going to jump around. Yeah, so that's going to be, so these are $3 spreads too.
Right.
So instead of $1.50, you can have $3, and we'll pull this up. So here's our bullish spread, 62.50 to 65.50. Here's our bearish spread, 62.50 down $3 to 59.50. And again, we could be, where was our 11 a.m.s? I just want to get this straight again.
11 a.m. was a
62.50.
45 cents it was costing
You're
us.
right. Yeah. Okay. Perfect. So 62.50. Bearish spread on the left. You'll
Yeah.
be selling this. Costs you 46.
That's right, because that has the value in it.
It does, and it's a lot of that. Now it has $3. It does have, so you have 20 cents of intrinsic value now because
Right.
it's at 62.30, 20 cents below the ceiling of that spread, and we're selling it. But also, what the big premium you're paying for here isn't the $3 potential. It's that you have until 2:30 versus
Time.
11.
Yeah.
And you know, as we've seen this week, last week,
Oh, yeah.
that the market moves between 11 and 2:30. You know,
Right.
so if you want to just play like a few minutes of the EIA numbers coming out at 10:30, the 11 a.m.s might be nice. But that's where the market's going to make you pay for the extra 3.5 hours from
Right.
11 till 2:30. You get defined risk, and you have profit potential to the tune of $3. So again, you're looking at $47 on the bearish spread, and
Yeah.
then the bullish spread, you're going to be out of the money. This is going to be slightly cheaper. But you can see, even being 18 pennies out of the money, you're still paying $28 in premium just to have that spread from 62.50 to 65.50. So what are you looking at there? About $75.
You know what's interesting here is that the trade from 11 to 12 is costing you an extra 15 cents. The trade from 12 to 2:30 is only 15 cents too.
Yeah, but what happens is
One's
the
a bullish,
11 and
one's a
12s are
bearish.
dramatically different, and
Right.
there's 30 cents of intrinsic value versus 15
That's
cents of
right.
intrinsic
And
value.
time.
That's where
Right.
that's where things really change.
Right.
Yeah, so interesting setup, and you know, no matter what, we've gotten some good action on crude the past couple weeks, man.
Oh, yeah.
As we've approached $70 at one point, we approached $60 at one point. It's about 10:25 right now. We got 5 minutes still in the news. Those are the setups, and what's nice is, regardless of what your market direction is, your market bias, you can see the type of options you have, all with defined risk, right?
Big
And
time.
all of these are two-way directional volatility trades.
Right.
And, you know, just to keep in mind, if you're one way or the other directional, you can obviously take one or other of these trades. You know, as in, if you're bearish here and you're just bearish, you can go in here and you could just sell it. And basically, the market's at 62.30. You're selling it at 62.03. So you're paying 27 cents in premium in the
Yeah.
oil contract.
Right.
You know, and basically you're selling it at 62.03. That becomes your break even, right? But what's nice here is your defined risk up to 62.50, no matter what.
huge.
You know, as you're about to get inventory
Right.
numbers in less than 5 minutes, and meanwhile you have profit potential until 2:30. If it happens to move $1, $2, which is not out of the realm
No,
where we've been.
We moved that yesterday.
Exactly.
Yeah.
So.
So let me bake. Let's see. Let's just see where we're at here. So I got it down 1.8% right now. So this came off the highs yesterday with some decent volume. Oh, but look at we're going right into where it broke topside from too. Okay. So, oh, this is going to be interesting. Yeah. So that looks well. It looks like it can pop a little. You know, I mean, on a short-term basis, that's how it looks right now. So because you know we came down hard. You know, it failed at the highs. Well, we'll see where it shakes out. But this would be. Today, I think this is a really good volatility trade because I would say, like, longer term, I'd be bearish. Shorter term, I'd be looking for a pop.
Okay.
You know what I mean? So,
yeah.
You know, we'll see where the baby shakes out. But
regardless what way you are,
no,
you're trading volatility,
which is cool.
You got action both ways.
Exactly.
And what's nice is if you wanted to have a bearish or a bullish bias, you're able to choose which spread.
Right.
Where you kind of have a head start on those numbers.
Big time.
Okay.
Stay right there, folks. Tommy and I are coming back with those oil numbers. We have the Dow Industrials down 352, Nasdaq's off 72, S&Ps are down 26. We're coming right back. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Oil, that's a big number, man.
It is a big number. So we had inventories. Let's pull this over, and you can see the price action here. We're up to 62.70. We were trading at about 62.30, 62.35, somewhere in those analysis. The analysis we were doing pre-numbers. So inventories fall 4.62. They were looking for a rise of between about 1.6 to 2 million barrels.
Right.
quite a miss in terms of inventories falling 4.62. That's the headline number. Crude inventories falling 4.62. Market median estimates were looking for a rise of about 1.6 or 2.
Big number.
Less oil, right? Less
Right.
supply.
Right.
Prices going up where supply equals demand. So that's why you see that price rising. Gas inventories falling 1.12 million barrels. We'll check back as those numbers continue to load into.
What a disconnect from the API last night.
So-
Because the API had them up last night also.
Okay.
The crude inventory.
Interesting.
Yeah, I know. Yeah.
So as we check back, market spiking 62.76 currently. So just to kind of recap again, as we were jumping around, right? We had the 11 a.m.s.
Yep.
We were going to be using 62.50 as our price point. That would have been a slightly bearish bias because we
Yes.
had some intrinsic value on the bearish spread to begin with. Now the noons, though, which was interesting.
Right.
That's where we're using 62, right?
Yes.
So that was costing us about
60 cents.
60
We
cents
needed
for
62,
both
60
contracts.
yes.
And so you can see when that, and that's why we talk about the bullish and bearish bias, because you had a 30-cent head start, as in you were paying for 30 cents of intrinsic value on
Yes.
the bullish spread in the noon one, and this spread right now, you could close out for 60,
12 cents.
65,
Well, 65. It's like 5 cents on
yeah.
the bid. Yeah.
Now what's intriguing there is, if you're still bullish, maybe you let that run, right? But let's say you say, the number wasn't big enough. I don't know how. It
Right.
was a big number, but you can always close out this trade. And then what happens is that your 62, your bearish spread, remains active
Right.
until noon. And
Which
so
is really sweet.
yeah, if you think it's spiking the wrong way, maybe you just think, maybe you think, hey, on that type of a miss, this market should have gone a lot higher. And maybe
Yeah.
you say, what's going on here? Where we came in decreasing 4.6 million barrels. We're looking for a rise. This market should have spiked above 63. Something's not right here. I'm gonna break even on the trade. I'm gonna take
Yeah.
my money off. And guess what? I think
it
it's
ride.
more bearish than I thought
Right.
it was, and I'll keep this bearish one open. And what's nice is some of these examples, man, it's really worked out well with the reversals lately in
It
terms
has.
of the first move is not the move that actually is the one that's carried out throughout the day.
Right. Pretty
So
cool.
we'll check back in.
Yeah.
It's only 3 minutes past
Big
when the
number.
news comes, and we got lots of oil trading left in today for sure.
Oh, yeah.
Oh yeah.
And let's go over and take a look at the XLE. So the XLE's been having a problem. It got a small bid yesterday. Okay, well, gave it up this morning, I guess. Okay, so yesterday we got to 67.53. You
And it
still
would make sense with oil down, a buck
yeah,
over $1.
right. You're
That-
still hanging at those lows.
Yeah.
This is these equities. Let's go look at ExxonMobil. I got a small bid yesterday too. Yeah, and not doing it today.
It would make sense. With
Yeah.
I mean, just, and it always doesn't behave like it would make sense, but today it kind of is with you get a little pullback like that. But we'll see
Oh,
if
yeah,
oil,
listen,
if oil gets
it's-
some acceleration to the upside off those numbers. 'Cause that's a big miss, man.
It
It's
is a big miss.
Yeah.
That's
If you could just go to top live, is that where were you going to?
yeah. No, I just want to
The-
bring this back up again because
Sure.
if we, this is gonna be cool. Well, now this is, yeah. I can't bring this one up because it's
Still
this is delayed. Yeah, but you can see this. You're coming into the strength. You get a small pop.
We're back in the past, 62.33.
And then you basically give it up in spades. Well, we'll
You
find-
looking for Nadex? Is that what you're pulling up?
Yeah. Because I just want to see that again because it's
Yeah. So
Yeah.
jumping around a bit,
Right.
62.58. I mean, what's always intriguing when this happens, right, is that you say to yourself, well, this is how the market, I'm just cleaning up the screen as we talk. You say, this is how the market reacted on a huge miss
right.
with less.
No.
What if it had
It's
come
important.
in? What if
Yeah.
it had come in with 6 million plus barrels as opposed to falling 4.6 when they were looking for a rise of 1.6? Because the market is within 25 cents right now of where we were trading beforehand on that type of a miss. So what if it missed the other way? Always intriguing.
Oh yeah, no, I would say that the market should have went a lot higher.
Right, I agree. Exactly.
Right,
Exactly.
And what I've always found out, and this is what's pretty cool, folks. Okay, it seems that you can get more information, not just out of the market, out of kind of life in general, on the opposite of what is going on. Do you know what I mean? That the verification is more intense, I would say. That, okay, why didn't it go up that much? It should go up that much. Well, there's something else that's happening
No,
here.
right. I mean, that's, there's lots of numbers that come out on this EIA report, but the headline number, crude 4.6 million barrel decline, median estimate was 2 million barrel increase. You had Cushing crude up 3.6. Check out PADD 3 crude, down almost 7 million barrels. Gasoline, pretty close to in line versus the estimates, decline of about 1.1 million barrels. Estimate was a decline of 1.5. Distillates, slightly off, increase of about 500,000 barrels. Estimate was a decline of 1.3 million barrels. U.S. fuel demand rising almost 1% the past 4 weeks. Interesting for sure.
Well, and, before we know it, this is going to be the beginning of the driving season, May 30th, 60 days, right?
They're going to get the snow out of the Northeast first. And then the driving season. No, we are. I mean, it's April, right?
God.
Yeah.
Seriously.
Yeah.
Let's go take a look at inside the NDX with the strength versus the weaknesses out here this morning. That's Shire?
Shire.
Yeah, Shire is up 2.3%. You have Walgreens up 1.8%. Taken away from it, NVIDIA is down 4%, $9. ASML Holdings, that's another chip maker, down 3.8%. Facebook down 3.3%.
Just doesn't stop for Facebook.
No, it's not going to stop either. Let's see. Okay, so this is going to be interesting. So Facebook's going to go after its low out here. That's 149.
I was just going to point, it's quite a line that you could draw right on those tops of where it's been, right?
Oh, yeah.
That is like, the line draws itself, man.
Yep.
Talk about lower highs
Right.
over and over and over.
Right, and if you put that like on a 2-year weekly, and when you see this, it like just sticks out so dramatically, like, wow. Yeah.
Yeah. This is, that chart is almost the NASDAQ in the entire index was right. That type of a pattern.
Right.
And of course, that's going to be, your February 6th action when the market was kind of falling apart completely. And then we got the rebound. And then this is where, on a weekly basis, the Cambridge Analytica story starts breaking. Yeah. And of course.
And can you put the crosshairs right on the break? Because what happens here, folks, is that this is the crucial part right there. 150, 151. That's the next, that's the next level upside.
Say that next level upside. We're just below that level already.
I know.
Okay.
That's what I'm saying. If you go below that level with, let's say you get a couple points below it, which, bottom, then my take, then 132 is game.
Yeah.
That is going to be a monster heads up. Now, what we had this morning is that Google didn't jump the creek yet. It's trying to, and my take is this, I get ABC structures down all over the place. But Google jumps this creek, it's going to be monster problem. Who is trying to jump the creek this morning, who's going to lose a fortune on this deal, is Boeing. Boeing is down $13. You're right at the 13.17.
Which is that February 5th day. It was the first big acceleration of the market downward.
Right. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow's down 350. Nasdaq's off 85. We'll come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 321. Nasdaq off 75. S&Ps are off 25. And oil.
Check back in on oil. So it's 10:42. We're 12 minutes after that news, and we're now below where we were prior to the numbers coming out. Pretty remarkable. We get such a miss like that. And like we talked about, you could have maybe... there's a number of ways to trade that when you're dealing with two contracts, especially one to the upside, one to the downside. But if you want to think about having fast fingers, man, because we got a spike up to almost 62.80, and we're now 50 cents below that level.
And the noon one, you would have been ahead by 5 cents because you could get out at 65. The bid was 65.
Yeah, 62.65 would have been the example we were looking at.
Right.
You could have exited that position, taking value off the bullish spread. And as we approach, so let's just jump in. The noon, here's our noon spreads. And again, we would have...
62 we had.
So this would have been the bullish spread that we talked about. You could have potentially exited for some value. If you had done that, your bearish spread, 62 down to 60.50, would have been the one that remained active. And you can see this is still pretty out of the money with 37 cents out of the money, but you have until noon. And with this type of price action, these are 5-minute bars we're looking at.
Right.
Right now you only have 3 cents, which would be $3 in value if you're going to buy that back.
Right.
But you have in a good hour and 15 minutes, and guess what? If you had made that trade, you had covered your entire investment, and anything you had reaped in there would have been a profit.
Exactly.
So pretty interesting, the move in light of that surprise. We haven't seen a surprise by
that
almost
big.
6 million barrels when you look at 6.6 essentially, where we had 4.6 million barrel decline, and when the market was looking for a 2 million barrel rise. And right back where we were. All right, we'll check back in one more time throughout the hour.
Let's go over and take, Lennar came out with numbers this morning.
Yeah.
So we take a look at Lennar. Lennar right now is up 379. And now,
that's a big percentage move, as you say, for a
huge.
stock that closed yesterday at
Huge.
54, 57, whatever. Yeah.
And last night I was going over this at the 3 o'clock or 4 o'clock show. Now this is pretty cool, folks, because what you have here is this: is that what had happened with Lennar, the market in general, the majority of the market has these high volume lows from February.
Yes,
right?
that huge week where the market, where the VIX spiked to 60 or 70, or was it 90? Who knows? Yeah.
Yeah. Well, Lennar had something different. As Lennar pulled back in November, pretty bad.
Okay.
We get down to $54.
Yep.
Yeah, on a weekly at 39 million shares. Now watch this: 39 million shares. It shook it off, didn't break a low, goes higher, right? So then we come down on a weekly of the week of February with 37 million. So that's intriguing, and that's what you like to see. if in fact you think something's going to go higher. Okay, but that wasn't the end of it. Okay, so we had 37 million going to 39. What do? We come back down again with 29. It's like, okay, so 29, 37, 39. If we look at this yesterday, how it was trading on the daily, what you're going to see is that bottom line is that you came down. That was light volume. We rejected lower price. That's the third. You were coming into all over here, 54, 34, went 55, 48. So looking at that, it's like, okay, if this can't pop, the market's really in trouble.
Sure.
Bottom line is that they come out with numbers.
Yeah.
They come out with really good numbers,
Definitely.
actually. Let's see. No, that's not the numbers. I had this. Hold on, I already pulled this. Oh, there it is, right there. No,
scroll down a little bit. Just because we're only to 6:30. I think so.
There's some good numbers. Okay.
So there's your revenue, right?
Right.
2.98 versus 2.85.
Yep.
It looks like decimals, but guess what? That's $130 million extra in revenue just for the quarter.
Right.
Here's the big, right? Earnings. I mean, that's $1.11 versus 80.
Right. And now look at the new orders. That's a big one for a builder.
Definitely.
Definitely. Estimate was 18.9%. They come in with 30.
Yeah.
Now, the backlog is a monster for a new builder. And the reason being, folks, is that you get a good deposit, and after the deals of 2014 and 15, these deposits are pretty solid.
Okay.
Meaning that they're not. It's going to be a lot harder to get your money back.
Yeah, they're big deposits.
And it was up 95%. It was plus. It was like I was looking at that like, oh my God, that is like a monster. Yeah.
For the first quarter backlog was up.
That's
95%.
That's a good number.
Which is basically almost doubled from the backlog they previously had.
But you need that. But that's a monster number, man.
No, definitely.
That's a big number. So we'll see where this shakes out. The rates are still staying pretty good. If you go look back the last 6 months, we have gone up on a 30-year almost 0.5%.
It's interesting too, just in terms of the analysts, and take that with a grain of salt. As in, when the market peaks out, everybody's a buyer.
Yes.
But pretty interesting. They don't have a single seller in there, and they're rocking and rolling for sure.
Yeah. So, and if we look at the 10-year, so the 10-year right now is trading 2.773. Now the 30-year mortgage went from 3.85 to 4.45 average. Okay?
Over what time?
Over the last 6 months.
Okay, cool.
When these bonds have gone up.
Okay.
And that's not bad. It's still big money though. Do you know what I mean? When you're talking about bigger numbers.
0.75% over 30 years, right? And that's
big numbers. So just.
Market's getting a bit,
just as we did that, we just went from.
S&P's only negative by 18.
Let's go
Dow's
see.
negative by 240. NASDAQ only negative by 55. I mean, that's within the realm. I was joking, but guess what? Kevin Hinks coming up in 12 minutes. We'll see if we get a positive by the time he's on the air.
Yeah. And so this is the E-minis. The spike high is taking it out right now. 25.95. It's going right after it. And
coming off the lows, I mean, at about 6 in the morning, just after 6, I think it was like 6:20 in the morning. Yeah, that's when the market's made all of their lows. You're below 25.60. We're now 36 points, S&P points, which is almost 1.5% off of the lows.
Right.
And we're still in negative territory. I mean, these markets were down dramatically.
Yep.
Pretty remarkable.
Yep. And guess what? We got a long day ahead of us.
We're barely an hour into the trading day, man, for sure.
Yeah. Oh, let's go over to gold. So here we go. They're hitting gold.
And that would make sense as the market. I mean, Dow was down almost 600 at one point. Now it's down 250. Those are trading with some inverse properties, definitely today at least.
Look at that.
Yeah.
Look at that. They just hit that good. So let's go to the dollar, because that dollar, man, that dollar wants to test that March 1st deal. Well, look at it. It hasn't even moved yet.
Yeah.
Okay. Well, we get divergence. It hasn't moved.
There is that little spike there that correlates for sure.
Yeah. But, so...
Not the type of move you might think with a $10 price in gold.
The longer this stays here, the more that I don't like it, because, I'd like to see gold go up versus the dollar.
Sure.
That being said, though, this is going to be the third day in a row that there's no buyers here, because 11,800 this early in the morning is really low volume. And this is kind of like the same thing. Like, why can't you go at least touch that March 1st. It should be able to because they had such strength last Thursday.
Okay.
You know? So stay right there, folks. Tommy and I are coming right back. And, of course, we got swim lessons coming up next. Then we got Basil Chapman, Steve Rhodes, Dave White. We'll be back this afternoon. Stay right there, though. We are coming right back. Dow down 213, NASDAQ down 43, S&P's down 13. That seems like nothing.
We might be there. 11 a.m.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. That oil market, man. Look at that oil market.
So we fast forward, 10:55 in the morning. Yeah, and this is where it's always intriguing, man. So it pulls back to 62.35, and then boom, these are 5-minute bars. Spikes all the way up to 62.93, above $63. So that's where, again, you know, if we looked at, these are the noon spreads we're taking a look at. This would have been our bullish spread. You got another opportunity here. This time, you could take the bullish one off for $90 in potential value.
And you're only 60 cents.
60 cents, so you'd have some profit. And again, you know, you would still,
Look
and
at
let's,
that.
you know, we're now 90 cents out of the money for the bearish spread to have any value. But man, when you're moving in a 5-minute bar, a solid 50 cents from
well,
62.42.
90 cents, you only paid 60. So it's not bad.
Right. No, yeah,
Right.
that's a 50% profit in
Right.
itself. But, you know, the point is you just move 50 cents in 5 minutes. So even though the bearish spread would be 90 cents out of the money,
Right.
there's still a realistic probability that that could have value by noon,
Oh,
and
yeah.
you would be locking in your profit by just closing out the bullish spread.
Huge.
Pretty remarkable how
Wow.
if you follow these on a weekly basis,
Seriously.
where does that come from, right? Is somebody waiting out there to see how this market reacts? Because it was a huge miss, and we
Right.
said you'd expect some price increase
Yes.
more than what we got.
Right.
And you just had to wait 15 minutes, and then it came into the market. Pretty interesting.
And I committed 50 cents.
In 5 minutes, I know. So there was a buyer in
50
there for
cents.
sure. And that buyer was saying, hey, you know what? With those types of inventory numbers, this market should be higher. I'm going to buy it. And they sent it flying, man, and we'll see. Pretty
Holy
intriguing,
cow.
for sure.
Totally.
So, Spotify,
Oh, yeah, Spotify.
as we finish up the hour.
Yeah.
Pretty interesting yesterday. Up, and as the music
That's
comes
right.
in.
It started at 165.
Well, you put it, GPO. That's a little more action. It's so tough to tell. Is that today? That's only today.
That's today, yeah.
Okay, yeah, no, doing well, though, for where they came from, right? In terms of price action, pretty stable, all things considered.
Yeah. Stay right there, folks. Swim lessons coming up next. Have a great one. Have a safe one.
Thanks, man. Thanks, man.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.